Hello, hello, hello. Welcome to Al Stock Trades. Boy, do I miss you guys. I got a special video for you today. It is going to be amazing. There's going to be a lot of information here. So I recommend you have some water and I recommend or a drink, possibly some vodka, maybe a couple of aspirin and ibuprofen because you may get a headache after this video. There's going to be a lot of analysis here, okay? And this is very important for all the Clover Health, Clove Tards, Clove holders, whatever we call ourselves. This is going to be an epic mega analysis. So just get ready to rumble here, okay? So let me go ahead and share a screen here so we can get this going. And there it is. I got that ready. So a couple of announcements. I am going to be looking into, after we complete the mastering and also Brain Machine, we're going to be integrating our platform and our educational connection. So like now we can contact, so the people on our Discord, we can like communicate, we can video chat, we can do a whole bunch of things together, right? But check this out. What we're going to be doing now is we're going to take our mastering stock market course, Al Stock Alerts, and we're going to take it to the metaverse. Okay. So what does that even mean? So we want to create an educational experience like no other. So we're going to take, so you put on your Oculus glasses and you're going to be in a virtual conference room that's like sexy as, sexy, right? And you're going to have a computer screen above you where you can show people your presentation over what you're looking at, trades you're taking. And then each and every one, you have emojis that you guys can move and talk, right? Let me show you kind of what I'm talking about. So if you go on, let's say, YouTube, and if you go to, let's go to Jim Cramer. I know we don't like the guy, but him with Mark Zuckerberg on the Metaverse. You can see this nice thing where he's talking with Zuck.
Now let's move on to your.
And you can see them kind of all talking here. So you see that, where that's going to be us talking together, and you're going to have computer screens over us so we can actually have a virtual conversation and actually take this education to a whole new level. So that's the goal. I wanted to just kind of give a little shout out to that. I'm really excited for that. But, we heard it literally. We have a channel here where as soon as we get Clover news, we get it automatically to our Discord. So we got Clover just announced that on August 8th that their Q2 of 2022 results are going to be in. My recommendation is a lot of the bigger, like United Healthcare, Anthem, I believe they all are going to be reporting before Clover Health reports. So that'll be a good gauge over what to expect from this, from like kind of the Medicare kind of healthcare companies. Okay. So there's that. But this video is not about the earnings. This video is about some mega analysis. So what we're going to do right now, just kind of give you an overview so you kind of have a, overall syllabus, is we're going to be downloading the net income statement. We're going to download the balance sheet. We're also going to download the statement of cash flows, okay? And what we're going to be doing from that is we're going to look at the quarterly statements. We're going to sort the data out from, obviously, 2020 to present value. And we're going to be looking at a general theme that I think you may want to look at. This is extremely useful and important. Then we're going to go in, and if we want, I was going to do an intrinsic value calculation. And on top of that, we can do a price to sales projected calculation. Then we'll finish off the video with support and resistance lines. In fact, since I have our Discord up here, might as well get our support and resistance lines just ready to go. So people already do them. So here are all our members working on different stocks. So what we're going to be doing right now is let's do it now. So let's look at Clover on the minute. Get straight to business. Get straight to work, right? Clover on the minute. Let's do Clover on the day, and Clover on the hour, and then Clover on the week. So technically, the hour comes before the day. Too many commands. All right, there it is. So let's get straight to work here. So as you can see right now, we hit a resistance of 263, like I mentioned last week, and we're bouncing off and we're testing off of this $2.53 level of support. Okay. So this is extremely important because if we break this now, the next level down is 238 and 220. Then after that, 228 and 212. It's very clear that the lower twos have been the floor for the stock. And the question is, can it go lower? Can it go lower? But the reason why I have a hard time believing that a stock like this could go lower is frankly because of the PE ratio. So let me go ahead and let me just take a screenshot here of this image that I always look at, okay? Because I think this is something that we need to definitely share here, okay? So as you guys see here, these are his large caps, mid caps, and small caps. If we were to draw a box in 2008, kind of like where the crap hit, you can see that small caps are trading around this recession level. So small caps are already in a recession-like trends in terms of like what we're headed, in terms of the price action, okay, based off of these forward PEs. Now, if you look at large caps, we still have a bit, the large cap companies, majority of them are actually still overvalued. But this is such a weird market where if you're a SPAC, you've been devastated. If you have any like anchor on the SPAC side or any small, cap that's unprofitable, you've been destroyed in this market. And what I'm about to show you right now is data points directly from Clover that unfortunately no one's talking about. Like before, when I first started talking and covering Clover, I had a lot of people talk about the stock, right? Pardon me here. And now no one's talking about it. So let that be an educational value to you that a lot of these folks, majority of them were following hype, and now they've just stopped and possibly focusing on the next new hype or just stopped altogether. So that's unfortunate, right? So be that as it may, small caps have taken a hit. It's very clear. So this is why I think the floor is at the $2 range. I just have a hard time believing the stock is going to go below 2 because it's been hit and hit and hit, and I just haven't seen it. Maybe if it does go below 2, it'll be a strong V-shaped recovery where we have just a complete sell-off, and then we finally hit the freaking bottom of this market. Okay? So there's that. Now let's go ahead and take a look at the hour. Let's look at the hour here. Let's get the hour. So as you can see, we're bouncing off of that $2.44. So we might bounce off of that again. Again, that 221. And once we get to that 270, 307, 365, I'll let you know. Also, for the earnings on August 8th, I won't be able to do a live session. My apologies. Medical side is heavy on that day. Also Tuesday as well. Excuse me, but we'll be recovering it and reanalyzing what happens on a further video subsequently within that week. All right. Now, if we look at the hour, let's go ahead and look at the day, kind of bouncing off between that 278 and that 223. The other hard one, you see this triple decker there? There's a $3.74. This is a very strong resistance level. Okay. Now, after this, I'll talk to you guys about the whole resistance and all that. But you can see 265 needs to be bounced off. Once we get to that level, then we can start fighting the 419, 747, 1204, and 1503. Now, very quickly, this is a long-term play. So doing the whole technical analysis, it's important if you have like some people on our Discord, they have like 2 accounts. They trade Clover. When Clover goes down to 2, they just, put a couple $1,000 in it. And then they ride it back up to 250, 260. And then once it breaks resistance based of our artificial intelligent technology that draws you the support and resistance lines, they sell it. And they make I don't know, like a 20, 30% gain. And they keep riding that. And they do other stocks too, right? I've seen Upstart and all that. I've seen a lot of people do day trade these stocks. Okay. So there's the technical analysis portion. Let's go ahead and look at the comments here. Put in buy orders at 195-ish and average down from there. Market crash continues from here. Don't be buying Clover right now. So if you are a long-term holder or a long-term investor, it doesn't, you can't really time the market. It's very difficult. And it's one of those things where it's, $1.95 versus 250, in about 3-5 years when the stock's trading at 30, $50. I mean, 30 to $50, is it really, you know what I mean? It's kind of like these pennies, nuances, right? That do magnify, but it's just a lot of work, right? Prices at the grocery store went up again. Oil futures are crashing. Did not result in price cuts at the store yet. So this is a very important comment because there's a lot in there. So let me open up this window here and let me show you guys something. So let me show you this here. So this is our sector rotation. And I want you to notice something important. So let's actually zoom out to the 128 day. So remember back in November, I said, you know what, guys, ExxonMobil, a couple of other stocks, we made our money. We doubled our money, right? We doubled our money. We did great on the oil. Okay. There's someone in our group that's doing more Oxy again, because they're looking at Warren Buffett's play, which I totally agree. The fundamentals are there. The free cash flows are there. In fact, part of our Discord, we do follow this lady here. I integrated her with our Discord. I think she's wonderful. She's very smart. Later today, was it today? She talked about the free cash flows of oil stocks, and they're just on a rise. Yeah, she posts so much. It's so hard. But I'll explain to you. She does a lot. This is a lot of great information, and it gets directly sent to our Discord. But long story short, she talked about free cash flows for the oil. Here it is. There it is. And energy sector free cash flow yield is at near all-time high relative to the S&P free cash flow yield. So I do agree with the whole oil argument. But that's weird. I got some technical difficulties. Looks like this mouse. All right, looks like we're switching off. We're switching to the touchpad right now. This mouse is not working for us. But as you can see right now, energy has inflected downwards. Okay, energy has inflected downwards, and that's important because we also want to look at gold, commodities, these types of prices, and how essentially are those doing in regards to inflation, because we want those to come down, and Biden's trying to really take care of this because the midterm elections are coming up. So there's a lot going on to unpack here. But what I want us to see here very quickly, in fact, we can just manipulate the timing here. We could do 60 days, and you can see something here. So 128 days ago, healthcare and technology wasn't really leading the pack, right? Now it has, right? But in the beginning, if you go back down here, it was actually quite down. So if you look at 60 days, we're starting to see healthcare creep up now, and we can see healthcare is on the rise. So if we go to the past 15 days, you can see healthcare has been outperforming, as you can see here. You see that? How the healthcare is up and energy is down. And if we look in the past 7 days, we see healthcare down here. But last week, healthcare was doing amazing. This week, not so much. But overall, we're starting to see a sector rotation switch where energy is coming down And then now whoever is going to win, someone's going to win here. And we already know who might win. I think it's going to be the recession safe stocks such as healthcare. Okay. So there's that type of things I want you guys to look at. So that answers that. If it goes under 2, I'm maxing out my Roth for the rest of 2022. Yeah, I mean, if it goes under that, I'm not going to argue with that. That's amazing, right? On the other hand, I'm buying Clover at these levels, and if it goes lower, I'll buy more. I am not about squeezing every penny out of trying to buy at the exact bottom. No, exactly. Yeah, it's just if it happens, it happens. Holding over 43,000 CLOV shares. This is the way. Hell yeah. No, I'm glad that you're here, Rob. And, can you guys comment where you are in the world? I think that's really cool because people that are signed up to our mastering and also our stock alerts, they're like a lot of Europe and Italy, Netherlands, it's China. We did have one Russian, but I don't know what happened to him. I don't think he can trade stocks anymore. You know what I mean? I feel bad for him. Poor guy. Okay, so Nashville, Tennessee. For some reason, my mouse here is not, because I have 2 mouses. There it is. I had to reset it. I like this mouse better than the mouse pad, so I can do more work. So now that we went ahead and please comment down where you're from, because I want to get to know you guys, because we're building a community here, and I don't want to I just I want to know you guys. It's talk to you guys, teach you, and love to know. Okay, so now that we went ahead and did this technical analysis, now let's go to the fundamentals, which is the most important. This is where the magic is. Okay, so get ready to learn. Okay, so let's go to our room 1, and if you hear a lot of noise, it's my crazy ass dogs running around. Okay, so let's go ahead and we're going to download a couple of statements. We're going to look at the net Q. Please follow along for our mastering and all of our Al stock alerts. Follow along. Okay, so we're going to hit this, and we're going to hit enter. It's going to ask us for the symbol, okay? We're going to hit CLOV. Brain machine's thinking, and it's going to give us back this data. This is the net income statement quarterly. So we're just going to put that there. I'm going to exit this out because we don't need it. We don't need it anymore. We're going to hit up net income, okay? CLOV, and it's the quarterly. We're going to open this up. We're going to go back. We're going to hit /BAL for the annual balance sheet. Sorry, quarterly. We want quarterly. We're going to hit download, enter, CLOV. We're going to download the balance sheet. All in real time, baby. Okay. And again, balance sheet, CLOV, Q. All right. Okay, we're going to open that up. And our last statement, we're going to go ahead and do the most important, in my opinion, is the statement of cash flows. We're going to hit the Q. We're going to download, hit enter, hit CLOV again. Brain machine thinks, spits out the data. See how fast you can do any stock. It's so phenomenal what we built together. All right. The goal was to build something for retail because it's crap. It's crap. Let me kind of share with you guys something that pissed me off. So very quickly here, Morningstar used to give out free financial information of at least 10 years. 10 years is enough, right? Of the free cash flow, and it really helped value investors evaluate stocks. Well, would you look at that? They don't do it anymore. Even if you pay them $35, they don't have it anymore. You would have to get the $30,000 license, which allows you to manipulate the data, which is complete garbage. So let me show you. Oh, hey, man. Thank you so much, Kenneth. I just saw something pop up. It shows me this huge thing. Hey, I appreciate the super sticker, man. I thank you so much. Definitely everything that gets reinvested is going to get reinvested back into retail. Thank you so much, man. I really appreciate that. God bless you, man. Thank you. So what Morningstar did was remove the most important information that we could honestly use to basically help retail and teach retail investors how to evaluate stocks. So now you would have to essentially do it like an extremely very long way. It's fundamental analysis, but for anyone starting out, it'll look daunting. So what we've decided to do, and I could just read you this letter I sent over. I said, hello, everyone. In the past month, Morningstar attacked retail value investors by no longer providing key functional information that makes it easy for retail investors to value a company. Our platform can still find the information. However, I have made it my mission to slay and replace Morningstar. I have been working on programming this information in Brain Machine to make it easy for all. Not going to lie, pretty time consuming, but I think we're close. So you see this here. This is how they used to report it, right? Now we're going to be giving this data, but it's going to be 30 freaking years of information. We're going to get you the return on assets, return on equity, everything you need to value a company all on one freaking page. We're going to get you the 3-year, 5-year, and 10-year average of the PE, P book, and P price to sales ratios so you can do your analysis. So I'm working hard on this, and it's tough, okay? But we're going to get this done. So let's go back up to room 1 here. I just wanted to share with you that because that's really pissed me off, Morningstar. Really pissed me off. But we got to continue moving forward. So here's the net income. Here's the balance sheet. And here's the statement of cash flows. So what I wanted, I'm just going to zoom in here so we can see. This is going to be a really incredible analysis. I'm going to go back to the questions and revisit where you guys are from right now, going back and forth. I'm going to sort the data and we're going to go back so we can have like a discussion. Because I don't want to hear myself speak, like this long. I want to like talk to you guys, Okay, so here's 2022 and here's 2019. Okay, so we're going to go ahead and we're going to sort the data to where 2019 is here and 2022 is here. So to do that, we go to data, we hit sort. So this is a good, Excel review. We hit options and we hit, left to right because that's how Americans read or English, right? In general, right? So what I want is I want the revenue. Okay. So I'll put the revenue here. Okay. And we could just put the year here too. Okay. I want the revenue in the year. For some reason, there's not a lot here, so we won't be using that number. What else do we need here? Let's see. Let's look at the EPS diluted. I want that too. So let's copy that. And that's good enough. So that's enough. So now we're going to go ahead. Let's cut this. Let's get the net income statement out of there. We don't need it anymore. And let's put the information that we found here on the statement of cash flows. Now let's go to the balance sheet. Let's see if we need anything from the balance sheet. I don't think we do, but let me just double check. So yeah, we don't really need anything for right now. I'm just going to put to the side just in case. So now we're going to go ahead and go to our favorite document, which is the statement of cash flows. Okay. So we're going to go here and we're going to sort the data again I want it in chronological order, right? Because that's how, we analyze. So we're going to go to options, left to right. And there it is. And I'm just going to take bits and pieces that are important. You can also get the net income from the income statement, but cash flows has it too. So we're going to go ahead and copy this, put the net income there. I want to look at the cash from operations here. So we'll put that there. I'm going to cut this and just drop it a little lower. So let's drop this here. Let's take a look. So what we're doing is we're just collecting data now to analyze so I can show you raw bones here, okay? Bare bones, whatever the word is. Okay. So there's that. What I want to do is free cash flow. So let's get that free cash flow. And we calculate it for you. So we'll do the free cash flow there. And now let's see here. Anything else that we need? So that's it. That's all I need right now. Okay. So now I'm just going to make it look sexy. So we're going to hit the revenue here, kind of space things out, make them look good. Okay. I recommend taking screenshots of this. Okay. Cash from operating activities. I like EPS diluted because it factors in future dilutions that could happen in a company. In fact, it's one way to pre-anticipate the shares that are going to be diluted, which one of our members talked about the treasury method, which I don't really necessarily do because I don't evaluate companies doing the WACC model. If this doesn't make sense, just ignore it. But it's a way to evaluate how much shares that are potentially could be added to Clover. I do a heavy discount rate that it factors in. Okay. So let's go ahead and bold this out. So we'll bold, and let's bold this guy here too. Okay, now let's take a break. That was kind of a lot going on. Let's talk with you guys. Okay, so Nashville, Tennessee. I love that. Very hot housing market there. California, hell yeah, baby, USA. Alabama, love it, love Alabama. Desert Ridge, North Phoenix. I love Phoenix. I'm Tucson, so I was actually born in Tempe. Canada, beautiful. I love Canada. There's a spa I went to in Ottawa called Nordic Spa, the best spa in the world. Literally, it's like you're literally outside in the snow and steaming freaking, like it's amazing. Chicago, great place for pizza, deep dish. Arkansas, hell yeah. Arkansas, I know a physician at Arkansas, great doctor there. Also, great online platform to buy guns that very friendly with Arizona. Thank you again for the super sticker. Tucson, Arizona, baby. That's amazing. Yeah, I love it. It's a wildcat bear town country there. If not the cat effing with the Arkansas, 24,000 shares in Colorado. Hell yeah. Colorado. I need to go to, I want to go skiing there. I think maybe this winter. All right. So comment down below where you are, build this beautiful community. So now going back, what we're going to be doing here is we're going to take this and we're going to convert it to a currency. Okay. So we're going to put it in numbers so we can read it easily. This doesn't need to be converted to a currency. This is a scientific method. Let me just kind of convert all of them to numbers. So it's numbers there. And I'm going to just, we can just keep that. And let's go ahead. Let's alter the width of this. And I don't know, let's do 15. There it is. So we can kind of see the dates here. So let's take the dates. Let's put them here. Okay. And this is going to be gnarly. Okay, guys. So check this out. I want the stock price at around December 31st of 2019. But has it been trading that long? I don't think so. That's why it's zero, a lot of zeros here. When did the stock actually start trading? Does anyone know? Does anyone know when did Clove start? June 12, 2020. I think it started earlier. I don't know. I guess we'll have the computer figure it out. Shall we? Yeah, let's do the computer. All right, so what we're going to do is we're going to hit this. We're going to hit equals and look at stock. We're going to look at the stock. We're going to hit up Clove. We're going to look at the date. And we're going to do, I don't really think 2019 was, we'll put it in to see. 2019, December 2019. I don't think it was trading publicly. Comma, and we'll look at today's value, what we have today. Okay. And we're going to hit enter and let's see what we got. Okay. So we got some stock values. Yeah. You see June 12. You see the number June 12. That's when it started trading, which is right when we did the right there, right? June 12. So yeah, we got it. So now what we're going to be doing is I want the history stock price because we're going to do a trend analysis. Okay. So we got the stock price here, historical. We're going to go there. Okay. I'm going to clean it up a little bit here. You can make it look like really gnarly, but we'll make it simple here. So I'm just going to bring this up here with all the other graphs that we're going to be plotting. So this is the historical price of Clover. Looks familiar, doesn't it? There's that short squeeze that we had, didn't we? For some reason, oh yeah, because it doesn't do intraday. This is open and close, which is good. That won't skew our results. So let's keep pushing it forward. Any day now, right? All right, good. So let's go ahead and make this a little bigger for now. Let's bring it down here because we're going to do more graphs. And let's just do stock price, okay? Now, very quickly, let's show you something here. If we add a trend line, and what I like to do is I like to take the trend line and I like to make it a red, almost like a simple moving average, but it's not. But let's go here. So let's zoom in really quickly here, okay? I'm going to zoom in. Okay. All right. This is called a trend analysis. Any number, so this is the red line is the trend and the blue line is the stock price. Very clear, okay? Anytime the number is above the red, it's a positive, like very extremely positive momentum, okay? Anytime it's below, negative, okay? So you can kind of see here, every time it goes up, you get a bullishness, but then once it falls back down, bearish. Once it pops back up, very bullish. Goes down, bearish. You see every time you get that spike up and then it keeps rejection. But once it fell here during that December, it was downhill, but then we thought we were going to go up. And you remember those triple spikes at around that $3.50? Let me show you this. You're going to learn some math here while you see those triple spikes that you noticed there, those triple spikes. Let's go back. Let's go back to our private Discord. Let's go to stock research. Don't they kind of look like these? Don't they kind of look like those? Sorry, not those. Like those right there. Boom, boom, boom. Right? So you see how it's all connected? All right. So you can see there was some rejection of the trend line. So now we could be on our way to bounce. We'll see. Okay. But I wanted to share with you that because that's going to be one part of our analysis. So let's put this on the bottom here. And we're going to save that. Now we're going to move up. We're going to analyze this data. Let me get, let's take a water break. I told you guys are going to need aspirin after this. A lot of freaking analysis here. All right. Oh, it's freaking hot in Arizona. All right. Let's see where we're at here. Arkansas, Colorado, Missouri, Kansas City, Missouri. I love Kansas City, Missouri. It's a great place. Drove down there. I remember I got stuck in a mud pile. We don't have no mud. It's not like that type of weather. I called the tow guy and he was like, hi. He spoke to my girl and he was like, how you doing? I can't do it right. He's like, how you doing, dear? How you doing, dear? We'll be on our way. Just go ahead and sit tight. So something like that. It was so cute. Yeah, I tipped him really well. He was a very nice guy. Okay, so January 2021. Where's that? What's that? Oh, that's when it used to trading at 30,000. Oh, Singapore. Hey, talk to Chicken Genius. Tell him what's going on, man. I made a video. That's my dog. She's fighting with. Yeah, she's annoying. 139,000 shares. Hell yeah, man. You're almost at insiders level. Thanks to Al and AZ Matt System. We will always have valuable in-depth info. Hey man, I appreciate it. I always try to give you guys the best. This is like, I'm giving you a real big boys analysis. This is like, I'm giving you like real analysis. Some folks just, it's very, Chamath says it really well. Okay. Chamath said this really well. Let me repeat it. I really like what he said. He said this, okay? When you pay for something, you get a warranty, like, but when you get something for free, it's not going to be, what do you expect? It's going to be crap. So, like Facebook, Twitter, YouTube, it's all free, which means that there's so much garbage there that's not parcellated. which is sad because it just adds to that perpetuating cycle of gaps between people not knowing how to invest and learning from all these folks that are just pumping stocks out of nowhere without actually having a fundamental understanding of what all this means, how to read financial statements, what are annual 10K reports, 10Qs, and SEC filings, 13GD, all these things. So, yeah, there's a lot of, unfortunately, gaps. Good morning from Vietnam. Beautiful Vietnam. That's beautiful, man. That's amazing, man. Clover has a lot of fans from all different parts of the world. Damn, you're gonna have an 8-figure network if close hit. Yeah, no, that's what I'm saying. Yeah, there's gonna be a lot of wealthy people, especially in our group. There's a lot of Clover folks up in our group. It's really, really nice. January 8th. It's for some reason it says here June 12, 2020. So I don't know, but kind of it falls in line with the Google here, June 12, 2020. 4,000 shares from Singapore. Hell yeah, man. A lot of Singapore, man. You guys, a lot of the billionaires are actually going to Singapore. So Singapore is actually a really beautiful area. Very nice area. Okay. So now let's go ahead and let's hold on. Coco? No. She's like looking at me. She's like, oh shit, daddy's mad. Okay. All right. She's still a puppy, so she's a little she can be a handful. Okay, so let's go ahead and let's graph the revenue, net income, cash from operations, and free cash flow. Okay. Let's fix this up here. Let's go hit Clove. Let's get this 35. Let's make this a little fatter. Okay. And let's look at the free cash flow here. It's the net income, cash from operations. They must be bleeding in. So what I'm going to do here is I'm going to pre-graph this, and I'm just going to delete the cash from operations, just for now, because I have him down here. We'll just do the free cash flow just to make it simple. But I do want to graph them side by side here, and then I'll explain what the hell I'm doing. So they're kind of right on top of each other, which makes sense because they probably, let's see, let's look at the math here, because not too much investing. But down here for sure, the property, plants, and equipment. I mean, that right there signals to you that this could be a SaaS kind of. Yeah, so that's good to know, because once they do become profitable, so let me explain. Cash from operating activities usually gets subtracted from this number here, the plants and equipments, to yield free cash flow, and this number is so freaking low that it doesn't really matter to analyze. So let's just stick to free cash flow. So we don't need this. Okay, so now we know revenue is high and it's been increasing. Okay. We know that the net income used to be positive and the free cash flow used to be positive at some point. There was some positivity, which is right here, this number there. Okay. But what we're going to be doing now is we're going to look at the free cash flow, which is in yellow, and we're going to add a trend line. Okay. And this trend line, we're going to make it in red. We're going to make it thick so we can see it. Okay. And then we're going to go ahead now and graph the EPS. Okay. The earnings per share. Okay. And we want this to see it go up to being positive. So we're going to go ahead, bring down this. We're going to push this up here now because we're going to be analyzing the data. We're getting to our analysis section. We're building it here for you so you can see where this is coming from. Right? I like to teach you how to fish so you learn, right? Knowledge is power. Okay. Then we're going to go ahead and add the trend line here. Okay. Again, we're going to make it in red. We want to see it, and we're going to make it thick. Okay. And now we're going to go here and stack this on top of each other. Okay. This is our CLOV analysis here. Okay. Now let's zoom out a little bit here so we can kind of see all three of the graphs. I may have made them a little too big. I get too excited sometimes. So very quickly, let's zoom out a little bit more. This is good. Let me know if you guys can't see this. Okay. Okay. So as you can see right now, if you look at the EPS, if you can track down the EPS, when the EPS goes above this trend line, you can see there has been positive movements on the stock. It has been trending down as indicated down here, but once it started tracking back up, we did see, if you go down here, we did see quite of a rebound. It's delayed, right? This is not technical analysis where it's like boom, boom, boom. This is delayed because it takes time for people to register it and then Wall Street to make the right moves, right? But what we're seeing now is we're seeing an increase in EPS. Now, if this continues going up, we already know in 2023 they're going to be profitable. We already know that the free cash flow is going to be profitable next year. And if the net income becomes profitable, we are about to have a trifecta. Okay, now what the F is a trifecta? Now, let me explain to you what the hell a trifecta is, okay? These are my terms. This is my technical analysis. It's called fundamentals, okay? So we're going to go ahead and we're going to draw a shape, okay? Okay, we're going to draw this shape here, okay? And what I want to do is I want to highlight this shape in red. And I want to have no fill. And I want this to be thick. There it is, okay? And let's go ahead and let's make it right there. And let's put this right there, okay? You see right there when the net income and the free cash flow was above that trend line I drew the linear free cash flow trend line. I'm going to zoom in so you can see this. This is important. You see that trend line where that free cash flow and that net income was above my trend line? Look down. EPS was also above my trend line. Look down at the price. You understand what I'm saying? You understand? It just retail took it to shit because they don't know how to evaluate. At this price point, the stock wasn't, it blew past its fundamentals because at that point, direct contracting didn't happen. Well, how do we know? Look at this bump right there. Direct contracting came online around here. That's why you see that big increase. Okay. Well, guess what? Now we're tracking above. The EPS is above that trend line, and we're slowly going to be tracking above the trend line here. We are nearing profitability. And we could get something like this very shortly, and we will ascend to our intrinsic value, and the market will slowly get to that level. Now, again, if you want to learn how to do these analysis and more analyses, we're going to be teaching you all this in the mastering so you guys can make a shit ton of money. But just make sure you donate to nonprofits and help the historically marginalized because, making money and all that is nice and all, but you can't take nothing with you. So you got to think, 50, 60 years ahead of that. Okay, but as you can see, this is how rich people make money, okay? So this is how analysis works, okay? So let's go ahead and let's do some questions. And then now what we're going to do is we're going to shift to our intrinsic value calculation, which let me show you before we shift to the comments. Let's go to our intrinsic value software. Let's go down here. So we did an update. So it looks completely different. We blacked it out. Dark mode, baby. Very sexy. We have a beautiful workspace now. And the beautiful part is I want you to look at yearly here. If we type in 2 years, it projects out. Look at that, 2024. You guys see that? Let me zoom in here so you guys can see. This is so rad. Okay, we've made this super intelligent. Okay, let's do 5-year projection. Look at that, 2027. Let's do a 10-year projection. Boom! Look at that. So I'm very proud of what we created. It's very, very nice. Definitely a great way to learn how the big boys find value. Okay, so now let's go ahead and see if there's any comments. I'm hoping so, but we'll sell $48 like Al's intrinsic value. So here's the thing. It depends. I'm going to keep informing you guys about the intrinsic value calculation, how Clover does over each quarterly report. But the closer we get, the more clearer the image is going to be. So historically, usually a company tends to decrease their revenue growth once they mature. So I'm going to let you know. It could be 35, could be 48, could be 60, who knows? But I'll let you guys know. So it's very fluid. It's very fluid. You always got to look at that, especially for companies that are like I call this a startup, right? Okay. Even that's almost 7 million. You're sitting good. Oh yeah, for sure. Yeah, that's good, good, good. All right. One share. Hey, man. Hey, one share is all you need. One share is all you need. That's all, enjoy. That share is going to get you a nice, nice dinner in, let's see, where are you from? I don't think you said, if you're in Singapore, it'll get you a nice, fancy dinner, I think, right? All right. So there it is. So what we're going to be doing is now we're going to look at that revenue that we took. Okay. Let me go down. So this was quarterly. So let's go back to Brain Machine. Okay. Let's go to our room 1 from our Brain Machine. And we don't have permission. Room number 1. Sorry. So let's, what permission? Okay. So let's do, I created the damn thing. All right. So let's do balance sheet. No, what am I saying? Let's look at net annual income statement. Download made annual income statement by symbol. Hit the CLOV. We're going to download here. Go from here. And then I'm going to save this because this is a very, very strong image that you guys need to understand. I'm sure no one really did this analysis before. So there's a lot of new investors that came online. So I'm probably showing you guys things that you've never seen before, which is really nice. It's an honor and privilege to be teaching you guys this. It really is. Financial independence is, if you don't know how to do these types of things, guys, it's going to be tough. America's going to be a hard place to live in. All right, so let's go ahead and do option and left to right. And now we're going to go from 2019 to 2021. Let's go ahead and column. Let's do 15. And here's the revenue. Okay, we're going to go ahead and switch it to currency. So 462, 272, and 1471. Not even Seeking Alpha is correct. I don't know why, but this is for the yearly. So 462. So we're going to go to our intrinsic value. 462 for 2019. Again, for 2018, since they did file like an S something form, it doesn't show up here because it's not technically within the system, but it's 284. Don't ask me how I know. I've looked at the shit. I analyze the crap out of this company. So here's that 2020. Let's look at 672. I told you this was a mega analysis. This is a mega analysis. This is a huge analysis. 1471. Okay. 1471. And then for 2022, they said anywhere between 3 billion to 3.4. We'll do the lower 3.3 billion. Okay. So make it low. And again, these numbers are in millions. Okay. So we're going to go ahead. And I think personally it's higher than 5% because let's go to our calculation here. And let's kind of bring this down here for a little bit. If you remember that time when they were free cash flow positive, let me zoom in here so you guys can see. Remember that time when they were free cash flow positive? If you actually look at the revenue, don't ignore this. The revenue around Q4 of 2020. Let's go here. It's a faster way of getting it. We can go directly to, again, this is all alstocktrades.com. Q4 of 2020. Let's go to financials. Go to revenue. Let's go to quarterly. So if you do Q4 of 2020, let me see. Yeah, it's not. It's not. I wouldn't call that I wouldn't call that a reliable. I wouldn't call that reliable. But the point that I'm trying to make is that it's going to be more than 5%. I honestly think the estimated free cash flow for Clover, I think it's 10 to 15%. I do believe this is a technology company. They said it, but I do believe the way their financial statements, the way their plants and equipments, it really smells like a tech company, and it's very clear they are. So I just wanted to point that out. But for the sake of being conservative, we're going to give them just 5%. That's it. Okay. So, and if for people that don't know, on average, how much, or on average, what is the percentage of free cash flow from revenue? Let's see if someone says it up here. It's usually around. It usually historically is around 5%. That's a good conservative way of doing it. I'm trying to find the exact document. It's somewhere in our Discord on average. I got to find it, but I asked the question wrong. But long story short, 5% is a really good number to estimate that future free cash flow. Okay. So let's go ahead and let's get on with it. So we go ahead and do that. And again, they're not going to be making $284 million, guys. We're like going to lowball the shit out of them right now. Okay. Again, the lower it is, the better. Okay. In terms of our analysis, we don't want to overvalue it thinking that we're smart. You know what I mean? That's the most dumbest thing. So we're going to hit this here. Now we're gonna go put the number. We're gonna take these numbers, put them here. We'll just make them look nice here. We don't. We'll just scoot it down. It doesn't matter. We'll scoot it down here because we don't have 2022 because we're projecting. Next year we'll add the 2022. All right. So here it just takes the average, so we can put it wherever we want. So 23.16, 73.55, 150. Okay. So now we're gonna hit 2018. They made 284. In 2022, we're expected to make $3 billion. Okay. So on average, they're growing 80%. Okay. We're going to go ahead and watch this. We're going to project it out 10 years. Watch, as soon as you do that, boom, we got 2032 right over there. Then we're going to discount back into today's present value. In terms of shares, you go to room 1, you type in shares, and this gives you the float, so you can look at short squeeze if you want, but you do Clove, it gives you the shares right here. You can do the float and all that, but the shares outstanding says here 378. That is incorrect. When's the most recent? When was this filed? March 31st, 2020. Let's see here. Yeah. So we got to take the sum here. So I don't know why. Interesting. This is incorrect. This needs to be fixed. Okay. Very clear. We can take this number here. We can add it with this number, which is right over here. Again, all the data that we get, for some reason, and this is something I don't understand. For some reason, the Clover Health information, the way it's registered in the SEC is completely BS. It's not registered correctly. So when I queue the data and get the data, it's not reported correctly, which is why Seeking Alpha, Morningstar, they all have different numbers and all, because and it's not Clover's fault. There's something fishy. I don't understand why, but we can queue the data directly from their document. That's fine. We'll do it manually, whatever. 473. Okay. So we do 473. I'm going to round up. We'll do 474. Okay. We'll do that. So as soon as you do that, you get these, share prices. But now hold on. I don't expect this company to grow 80% for the next 10 years. We got to be a little conservative. So don't get too excited. All right. So what I want to do, actually, this is cool. We can hit 1 year project. We'll do a 1 year projection. And you can see that if we do it this way, we can see the stock is from recession level of $1 all the way up to $280. Okay. Let's work our way up. 2 years, 3 years, 4 years, 5 years, 6 years, right? And again, this is extremely conservative based on this is me trying to ascertain like if shit hits the fan, what would it be at the value of where it's growing right now? 1 to 280. Okay. Historically, once it becomes free cash flow positive, Wall Street will come in, big money comes in, projects out, they'll do the calculation and they'll take it. But now here's the thing. What we like to do is we're going to hit 75% of 80. Okay. We're going to do that. We're going to multiply it and we're going to get 60%, okay, on average. That's going to take us anywhere between 16 to, oh, by the way, we have a recession level now. So we can do recession levels and bear and base and bull. Okay. So we got the 16 level recession. We got the 38 for the bear, 54 for the base, and 83 for the bull. Now, personally, I want to be extremely like crazy conservative. I'm going to treat this company like an insurance company. Okay. I'm going to treat them like Humana. Okay. I'm going to look at Humana. I'm going to look at their growth. Let's look at their net income. And the beautiful part is even how they've been so mature, the net income has been increasing like double digits, which is amazing. But on average, their revenue, their growth has been hovering anywhere between 5 to 14, 18 to 8. So be conservative. Let's do 15%. So let's make Clover grow 15%. Now, let me explain to you guys. 15% is a fucking joke for Clover. Clover is not going to grow 15%. Like, let me explain to you what 15% means. Clover made $14.70. If it does grow at 15%, that means we're expected to make $220 million for the whole year, which means it's $55 million per quarter, which means that they would be at 1.8 billion rather than 3 billion of this year. So they're not growing that much. They're growing a lot faster. But I want to be conservative because I want this to be continuous to see if Wall Street was to rug pull, if people want it to be, I just want to know when the conservative folks are going to pull out their money, because I always like to be ahead, right? So I'm going to do 15%. And what that's going to do is if we do 15 based off of this data, we're going to go from $1 to $4. Now, don't freak out. We're getting numbers from 2018, 2019, 2020. Do you really honestly believe that Clover is going to be, their free cash flow is going to be 14 million? That's not going to happen. So what I'm going to do is I'm going to cut this. I think they're going to be making more than 3 billion from now on. So what we can do is we can cut this number out because we're being very conservative now. Okay. And by doing that, we can see that growing at 15% from that 3 billion, we can go anywhere between $5 to $10, which is exactly what these analysts are projecting. What this is most likely Canaccord. Then Canaccord came up here, and then we got later on Chase will be upgrading up to the $10 range. I'm teaching you what these folks are going to be doing. They're trying to project the most bearish. And what that's going to happen is most likely this is going to be the projection for the next year to 2 years, right? Now, do you really think they're going to grow 15%? I don't think so. I think a great number for a tech company like this, I think would be around 25%. Now, Google is a great company to peg them with because there's a lot of Google connections in terms of the data. So what we can do is we can take financials from Google on average, and you can see kind of the Google growth rate. So you can see, if you take the average, I would say there's 50 there, 25. Let's do 25. Let's look at the net income. I would say 25% is a great number for the next 5 to 6 years. And if we do that with 150 free cash flow, this is being super, super conservative. This means that we can ignore the bear, we can ignore the base, the bear, and the recession. We're going straight for the bull because there's just no way in hell, God's hell, that this number is going to be it's going to be a discount rate of a bear or recession level. And on top of that, what we can do is we can do the WACC model. If I've lost you, let me explain. We can hit up / advanced leverage, DCF for CLOV. We can obtain the WACC, which is 12.72. See if we have it here. There it is. As of today, we want today's, not in the future. So 9.7. 9.7 is today's WACC. And we can take the discount rate and go 9.77. Let me make 73. Okay. On average, if you really, really, really want to be conservative, $22. $22. That is just extreme concern. We're having them grow at 25% when in reality, they just had a 300% quarter. We'll see right now what's going to happen. But if we do start seeing them dip, best believe we're changing our analysis. Now, here's the thing. I don't think they're going to be dipping next quarter, a year from now, or 2 years from now. They're growing. They still have the whole United fucking States to take on, right? But I always want to be extra bearish and kind of get that idea of kind of where. That's why, it's important. We're going to be saying when they go up to these $22 levels, we're going to be saying, oh man, I wish I bought more at 2. That's why I'm saying it's an opportunity to get it right now at like what, 250 right now. You know what I mean? So on average, and it's very difficult to ascertain these prices and to kind of do these projections because it's like an art. But 25%, I think would happen. I would say 5 years from now, maybe 4 or 5 years. I think they're going to be growing heavily in the 40 to 55% range. If we can hit them up, I would say 45% growth. Hit it with the 5-year matches up with that. So I think project out to 10. At 45% growth, what we can do is it's going to be, if we hit them up with 45% with a 3, let me show you here. If we can go to the price to projected linear progression, let's do that. And let's do 3 billion. Okay. Let's go growth rate 45. We're cutting the growth rate in half. On average, I would say by 2025, 2026, I would say there will be around 9 billion, 9 to 10 billion. Let's say 9 billion. They'll be at $9 billion in 2025, 2026. You know what I mean? 9 to 13, but we'll call it 9 billion. Okay. So at 9 billion, we're going to put 9 billion here. We can hit 5%. And again, we're using 5% for these numbers. If they're a SaaS, which I said they have the hint of it, we're going to be using 15, 20%, right? I know I'm being a little bearish in this video, but you want, again, this is education. We want to make sure we have the bottom and the top range, okay? But if we do that 9 billion, because I think, they're going to be growing, 80, 50, 80, 70, 60, 50, 40. And then by 2025, 2026, they might start slowing down 25, 30%. But if we have them here, let's calculate the free cash flow in 2025. Okay. So if we do that 5%, guys, and I'm getting too excited. If we go here, 450. Let's replace that to 450. And if we project that out, we'll do 25%. That means by 2025, this could be a anywhere between $32 to $66 stock, which is why my price target, remember the base was around 40-ish, anywhere between 40 to 48. Now, if we do kind of the 1 year from that, there it is. We're going back to how we started, right? So there's a lot of math involved here, guys, and we're going to be teaching you this in the mastering course and how this all connects, right? But if we do the 10 years, 2025. I think in 2025, 2026, we're going to get at least $30. Okay. We're going to get at least 30. Okay. Let's replace this back up to 10% discount rate. Okay? So, and this is at 5% of the revenue. So there's that. I know that was a lot of numbers, guys. It was a lot of numbers, but I hope that was very informative. Thanks for all you do. 870 shares. Hell yeah. Orlando, Florida. Great place. I'm holding 10K shares for the next 10 years. Absolutely. Yeah. You know, and we're going to keep sending off these satellites as long as, you know, for people that don't know, each section here is a calculation. There's 4 calculations on top of calculations that project these numbers. There's a lot of computation that's happening within this picture here. There's a lot of equations in the background to make this look good. So there's a lot going on. So good job on in details. Yeah, I appreciate that. I want to give you guys the details because you know this is all about empowering retail investors, empowering you guys because you know, CNBC, Wall Street Journal, they all think retail is stupid. The SEC has the audacity to make a stupid little cartoon you would do a 5-year-old on how to retail investor. I'm not saying, you know, retail is dumb. You know, don't get me wrong, but at least give them the opportunity to learn, right? All right. And speaking about retail, I've been like giving, what the hell's been going on with smart money, dumb money? Let's see. Yeah, so smart money's buying right now, and for the first time, dumb money and smart money are tracking along together. It could be a bottom. Who knows? We'll see. But yeah, that was a lot. Holy crap. And you know what's crazy, guys? I still have one more to show you. F&A, man. All right, there's a lot of work. Okay, so let's do one more. Okay, so now let's go back to Clove. Okay. And we're going to be doing this, and the brain machine it'll give us this data a lot easier. But this is all from alstocktrades.com, so it's we still have it, but I like it on the brain machine because it's nice. It's more hands on. So look at the price to sales ratio. We can look at the quarterly here. Ignore this here. The price to sales ratio anywhere between 10 to 0.55. So what we can do for the price to sales, guys, I would say a price to sales. I would do 2. That's fair. We're not doing 4 or 5. That's half, right? We'll do 2. 2 is fair. We'll do 2. So we can do a price to sales. Let's do 2 here. Okay. Outstanding is 485. We're going to have them grow let's do 45% right now. We'll type in the ticker here. Okay. And then here is the prices for Clove. Okay. So this could be, and this is just price to sales of 2, growing at 45%. Yeah. Let's see here. How can we explain this? So let's go back to that 25%. And let's go down. You remember that 2025 we had it at 9 billion. So let's bring that 9 billion back. Let's see, by 2025. You see that track right there? 2025, anywhere between that $44, 44 to 70, 50, 56 to 93. So that $44 at 2025, $44. Can you guys, I don't know if you guys can see this. Let me zoom in here. 44.80, right, for that bear. Let's go back to our intrinsic. See that right there? This was tracking along, remember, at 9 billion for 2025. So we want to make sure the maths are lining up. Just want to make sure things are good. But let's be extremely bearish, like how we did in the beginning of the video. Let's grow them at Humana level, which is 0.5. Now, even if we grow them at Humana level at 0.5, We have, and we're going to start them at 3 billion. We already know that by 2032 and 10 years from now, if they grow 25%, which we know is not the case, and if we grow them from now at 25%, it's a 37 stock, anywhere between, it's a $30 stock in 10 years. Okay. But I personally think they're going to be at 9 billion. If you look at 2025 and then on, so I would say 15 years growing conservatively, we're looking at, definitely sub $60 to $100 stock. Okay. Again, the whole point is to be extra, extra conservative. Now, bringing us back to where we are, and let's do 35% growth rate at 0.5. I would say a price to sales of 1 is fair, which we know tech companies don't do that. Yeah, we're looking anywhere here, 2026, 2027, anywhere between 11 to 15 to 19 to 26. Okay, and this is at 1. I think it's going to be 2 personally, right? And if it does trade as a SaaS, it'll be halfway. This is the stock. These are the types of stocks, and I think it would cool off at around the 178 to 250, 245 region. Well, but we'll see when that happens. But right now, 0.5, 35%. I would say that's pretty damn good. Yeah. So there it is. So that right there is that analysis. And yeah, that's the price to sales analysis. Did you guys need an aspirin yet? That was a lot. Okay. Got to go. We'll watch. Yeah, it's a lot. It's a lot of information, guys. And that's about it, guys. That's a lot of Clover. Okay. We clove the shit out of you guys. Okay. That's a lot of Clover. Okay. But I'll tell you something. This is what it takes. If you have a company that you're serious on, it's a lot of analysis, a lot of assumptions you got to make. Because once this tracks into the correct direction, which we already know, once that thing gets up to that, above that trend line, we already know earnings per share is tracking up there. We already know they just got a CFO that's going to be starting, I believe, in August of this year. And we know that next year in 2023, they're going to be free cash flow positive. We already know we're going to get this trifecta, and we know the stock price is going to follow. Okay. I recommend watching and watch 2 times the speed. There's a lot of information here. So if you guys like this analysis, if you want to learn more about how to do this, we do offer 2 packages. The first package is our stock alerts, where you have access to all of our artificial intelligence technology, brain machines, and you're locked in on the price. And if you want access to our intrinsic value calculations, we still have some intrinsic value calculations throttled down in our stock alerts members. But if you want access to everything that we offer here in the Mastering Stock Market course, which is honestly more like a software than not, it is in beta access, which means that we're about to include over 50 to 100 lectures on, even more, on technical analysis, fundamental analysis, and options. Okay. We're going to do it all. And it's going to be a one-stop shop. But that's my spiel. And now I have to go shift to the medical side, and I have to go review glomerular nephritis. I have to look at nephrotic syndromes and a couple of renal pathologies, and then do some questions. And then tomorrow do some neuro. And that, go from there. So yes, please, everyone, yes, please give a please give a thumbs up thing. I don't really ask, for that. I should, because it does help with the YouTube algorithm to get that video out. Because there was a lot of assholes that talk crap about Clover, and it's just not fair, because they're doing good things. Okay. This is not a freaking AMC. This is not a dying theater popcorn feeding crap company. Okay. This is a real freaking company. Okay. So, yeah. And also please subscribe. We're almost near that 4,000 subscriber mark, which is insane. I just wanted to make a few videos for my family that were asking me, can you analyze this stock and that stock? Then I got people interested, and I was like, you know what, man, let me go ahead and show them how this is done. So, here we are. So, yeah, it's a pleasure. Yeah, no, yeah, it's a play. Yeah, it's a lot of science. I'm going to stay up. I'm going to make some coffee. I'm going to stay up. It's always a privilege and honor to serve each and every one of you guys. God bless each and every one of you. And when you do make that money, just remember, definitely donate. Definitely give back to the historically marginalized. It's not about what you have. It's about what you do with what you have. It seems to me that based off of the fear and greed index here, let's see here, less than 30 is fear. Great. Sorry, what is that? Greater than 30 is fear. So where are we at right now? Let's go here. So we have been tracking down, have we? Yeah, so we've been tracking down on the fear here. And then the fear greed analysis for the S&P is neutral, but the NASDAQ is pretty greedy now. Let's look at the NASDAQ on the week, the day. Yeah, recently it's been bad because of the CPI data. The CPI data is tomorrow. Write that shit down. CPI data tomorrow. Okay, not that fake one that happened. People. All right. All right, guys. God bless each and every one of you. Take a screenshot of this economic calendar because there's a lot of fake news out there. Where the hell did I put it? This is the economic calendar for July. Two really important dates. CPI is actually tomorrow, July 13. Here it is, CPI June. Also, Q2 of GDP. We're going to see if we're in a recession or not. All right, guys. Oh, wait, let me take a screenshot. Pause the video. Screenshot. All right. Love each and every one of you. We like to empower retail investors, and I can't wait to see you guys in 5-6 years. Also, we are going to be creating a Metaverse conference room for our private Discord members, as well as our mastering stock market students. So when we do teach, we can have a nice little room where we can all sit down and see each other and move our hands and talk and really talk about what we love, which is to find undervalued companies. Okay. This is really freaking cool, guys. Internet's amazing, and the future is bright. Okay. And I can't wait to build all this for you guys. And hopefully some of you guys can help me build it too. And we can build something amazing. All right. God bless each and every one of you. And I'll see you on the next one.